Hey, what's going on? This is Charles with Chadwick Experiences radio show. And I just want to share with people, there's some information and an opportunity I missed about 21 years ago. I could have had an opportunity where I could have had some money, where I could have pulled out of something and it would have helped pay for my college degree. Or at another time in my life, there was another opportunity. I could have took some money out and bought a car. There would have been no taxes, no 1099 to be paid for on that money. And what am I talking about? I'm not talking about stocks. I'm not talking about a money market. Today, we are going to talk about life insurance. I have my uncle here, Esau Waters. He served in the Air Force. He's retired. He deals in insurance and other things. So I'd like to welcome my uncle Esau on this show for the Chadwick Experiences radio show.
Thank you. Thank you, Adam. Glad to be here. Glad to hear the support.
Yes, sir. And I'm going to just jump right into it. We're limited to 30 minutes, and what you're doing, Uncle, there's so much information into it. But I remember we come from a big family. We're country folks from North Carolina. You had sat down all my cousins on my mom's side, and you were trying to explain how we can invest in life insurance. And I would think I was 16 or 17 at the time. We were all young. And you say later on in life, this is a way that you don't pay taxes and you don't get a 1099. Here it is now. I'm almost 21 years later from that time you tried to get me to get the life insurance. And I'm kind of kicking myself in the butt because right now I'm in my 40s. If I wanted to take a vacation, I could have put into a certain life insurance policy and it would have built cash value. Me, myself, I have a term plan, but there's also other plans of life insurance. And today, I just want you to really put people up on game. What are the benefits of life insurance and what are the different types of life insurance?
Yes, thank you. Let me clarify something. Life insurance is not an investment. It's not technically can be called an investment, but it's life insurance. There's different kinds of life insurance. There's term life insurance for a specific period of time, like 10 years, 20 years, 30 years. That's term insurance. And then there's what we call whole life insurance, where it's guaranteed for you the rest of your life. And there's variations of whole life. There's index universal life and there's variable life, and there's all different types of whole life insurance. But what I specifically major in mostly is the index universal life and also the term life insurance. Now they have what we call is term with living benefits. So it's a little different than the term straight term, but it's had living benefits in case you get sick. You can turn that policy into a monthly cash amount, so they'll pay you while you're sick. So that's called living benefits. And then you have the whole life, which I specialize in the index universal life, which is whereas you have your money that you would put in your life insurance policy is building cash value. So, there's the insurance company assign you a minimum amount based on the face value. So let's say you have a 300,000 policy. So there'll be a minimum amount you can pay, say, let's say it's $100, and then there'll be a maximum amount you can pay, let's say it's $4,000 a year. So if your policy is costing you $100, everything you put in over $100 will be getting interest, be credited with interest. And that's how you build a cash value. You want to pay more than the minimum. And that will allow you, let's say you could only afford $100 a month. Well, you pay $100 a month now, and you get a pay raise. Instead of putting the $200 pay raise in a car, you put the $200 pay raise into your life insurance, and that'll build that cash value quicker. And once you have built that cash value, you can start using that cash value to put a down payment towards a house or down payment on a car or whatever you want to use to it. There will be no restriction on how you use the money, like in a traditional 401k or something like that. But that's your cash value, and it can be used for your benefit.
Yeah, and again, I'll never forget it. 20 years ago, you tried to explain it to me, and before this, I kind of looked at my life insurance policy, and again, exactly what you're talking about. You talked about that, AKA Index Universal Life Insurance, but it's also called an IDU, correct? IDU,
index.
IUL. Okay,
Yeah, IUL.
IUL.
Yes.
I'm looking at mines now. I follow what my dad say. It wasn't necessarily wrong or right, but just to tell my truth and my story, I did a not whole life, but I did term life. And the way my dad explained it to me, he was like, the life insurance company is betting on you to live longer. But he said, I was married at the time, I'm divorced now, but he's like, if something happened to you, you might as well take care of your family. And that's a conversation that I think I want to talk with you as well. Why do people prolong not taking care of their family? So what I did a term, because my dad would teach me. He said, the life insurance company is betting on you to outlive that policy. But he said, if God forbid an accident happened, your family's taken care of. And term at the time was cheaper than like the whole life. So I took out 500,000, and it should probably be over with probably when I'm in my 50s or 60s. But had I really understand what you were telling me, I've been paying on this policy since I was 27, and it really didn't build no cash value. But had I took the opportunity you gave me, who knows, right now I could have a couple thousands in that life insurance policy. And like what you're saying, I could have been pulling that money out if I needed to put a down payment on a house or a car, or even when I went to college. There's nothing against me pulling that money out and putting it towards your college tuition.
Wow. Yes. So and most of the I can't fault you for at least you have a life insurance.
Yeah.
There's no reason in the world for anyone to not have life insurance. Get term, get what you can, because you want to protect your family. Life insurance is one of the most powerful tools in your tool belt. And you want to protect yourself. You want to protect your family in case something happened to you.
Yeah.
That if you die, how are you going to make sure your kids go to college? Well, that life insurance policy will ensure they get to go to college, and also it will be given to them tax free. So what better benefit is? What do you have to lose? So this is what we teach. It's like, as soon as a baby is 15 days old, put cash value life insurance on him. For the rest of that baby's life, he's covered. And so he can become a millionaire just by putting $50 away a month away for that child, instead of buying toys and all that stuff for Christmas. Buy my insurance policy, cash value insurance policy, and for the rest of his life, he's covered. He'll be a millionaire. And that's just putting $50 in. You can put even more in. So what happens is, we all need a financial education. I was in the military, and a guy came along and told us, buy term and invest the rest. Well, I bought term, but I didn't know how to invest my money. So now I'm just like you. I bought that term policy, and now that term policy is over, and I'm not in the stock market because I didn't know what I was doing. So, but I lost my protection. If I had got a index universal life policy back then, that policy will still be growing cash value. And so wealthy people are concerned about taxes. So the average person should be concerned about taxes. So a lot of wealthy people have their money in cash value life insurance. That's what they do, because you can transfer the wealth to your children tax free. And it's all about getting a financial education. Most people don't get a good financial education, and you got people don't know where to put their money. They're putting their money in the wrong places, and you put your money in the wrong places, your money is gonna be taxed.
Yes. And that's the key thing, man. Again, 20 years ago, you sat all of us down and you said, this is a way that you wouldn't have to, per se, pay taxes on, the gains. But at the time, I think I was 18 or 16. To this day, I still remember it. And, I reached out to and said, hey, Uncle, I finally see what you was talking about. And I just look at, I'm not afraid to say it, in our community, it just seems like not enough people really understand the benefits of life insurance. And, just being on social media, you'll see somebody, a single mother's son got killed, and then there's a GoFundMe.
Right.
I would think, the way I explained it to my friends, I don't have many, but I was like, you spend $50 a month on pizza, or if people like to drink a case of beer, they're spending that money. It's not going to hurt you. It's just a mindset thing. Why do you think so many people struggle with the idea of just a monthly payment of giving it, when there's so much benefits with life insurance?
Like I said again, it's called a financial education. We're never. You think about it. You go to school 12 years. They never taught you about finances.
Yeah.
You went to school 12 years and you get out of school and you still don't have any useful skills unless you will learn a trade or something. They don't teach us about money, and that's where the problem is.
Hey, thanks for tuning into this radio show / podcast. I just want to highlight something that my uncle just said. I know this is a different format from interviewing. My uncle said something interesting. It's not taught in schools. I'm almost 40 now, and I have to agree. Check out this clip by Robert Kiyosaki.
What does school teach you about money? And the answer is nothing. And that's not a mistake. That's not an accident. I knew that. Most people know that. But the way to keep the poor and middle class working hard is never teach them what the rich know.
As you can see from that clip, it's true. Money isn't taught in school. Now we're going to get back to this interview, but I just wanted to reiterate what my uncle said. The issue is money is not being taught in schools, and that's what I try to do here at Chadwick Experiences. So right now we're talking about life insurance. If you're a parent or a student, get you some life insurance for sure. It can even help you pay for college. That's what I stand for. Follow me at Instagram at Reduce College Debt, Chadwick Experiences.
Power of compounding interest. You got to know those types of things. The rule of 72. Whatever the interest rate is, you divide it in 72. That'll tell you how long it takes your money to double. So if you're getting 12% on your money in 6 years, your money is going to double. Well, that's not taught. And so we are taught to put our money in the bank, and they give you 0.01%. You divide that and in 72, how many years is it going to take you for your money to double? 144 years. Do you have 144 years to wait for your money to double? So the problem is getting the right financial education. So you must get a financial education. So that's what we teach. You teach your financial principles, how money works. Basically, how money works. People don't know how money works. Once you know how money works, nobody can stop you.
Wow. I think that's true, man. And I just want to thank you right now, man. It was nothing. The only reason I kind of really understand life insurance, I would say, is my dad. But also you, Uncle Esau, you really tried to get us into it. And I just want to thank you for that. So even for people, if you didn't have a blood, relative, I only know people about life insurance. Number one, my dad, he understood it to a certain degree. And then my uncle, this is my blood. But even if you don't have a family member, the resources we have today, there's no excuse why you cannot get involved or get where you want to be in life. So what I want to do now is just for you to give a couple examples of how people can use those life insurance policies for maybe college or a house. Can you explain the process? Like somebody takes out a policy, a couple of years go by, they're in a financial trouble. How can they use this life insurance policy?
Okay, so basically, let's say, for example, you take out, say a $300,000 policy.
Okay.
Face amount of $300,000, and let's say your payment is $100 a month, the minimum, and the maximum you could put in is $1,000 a month.
Okay, and
So,
can you give us an age example or scenario? A new little baby's born.
let's just start with an 18-year-old. I can't give you the actual. I have to actually run the quotes, but I'm just trying to give you
an example. So people can understand. I really want people to understand it.
So let's say you're 20 years old and you have a life insurance policy and you took it out and it's a $300,000 policy. Your minimum amount payment is $100. The maximum you can pay is say $500 a month. Okay, let's say that the cost of insuring you is say $50. That's what it costs the insurance company to insure you. Well, that $50 payment, the $100 payment that you make, 50 of it is going towards paying the insurance. The other 50 is going towards cash value. And that cash value is getting interest, going to be credited interest by the end of the year at a certain amount based on the index. That's where the index universal life comes. The index could be the S&P 500. It could be the Hang Seng index. Whatever that insurance company's index is, they credit you interest based on how it performs, and they credit your account. So as your account is getting credited, if you're getting let's say, for example, you get 9%. So if you get 9%, well, don't you want to put more than $50 in there? You want to put as much as you possibly can. So let's say you could put, the most you could put in is $150. Well, what do? You put in that $150. And see, Index Universal Life, you don't have a set amount you have to pay. You have a minimum amount and a maximum amount. So you want to maximize it. So you may not be able to put $500 away right now. But let's say you keep working on your job, you get a raise, and now you can put $250 in there. Instead of putting on a car, you put the $250 in your life insurance cash value, and it builds its crediting interest. So what I say whatever the interest rate divided by 72, if you're getting 10% interest, divide that by 72, 7.2 years, your money is going to double.
Mm.
So you keep doing that, and every time you get a raise, you continue until you max out how much you can pay the maximum amount. So imagine if you could pay $500 a month, that's $6,000 a year getting credited. You know, subtract the $50 a month going towards the payment of the insurance. That's $450 that's going towards, that's in your account, that's getting interest. So that's the beauty of it. It's credit. So let's say you build it up, and now you paid over the years, and now you have $20,000 of cash value. And you say, now I want to use this money. Well, how do I use that money? Well, you go to the insurance company and say, look, I got $20,000. I want to borrow against my cash value. So what you do is you tell them I need to borrow some money. Well, you can borrow up to 90% of your cash value. So you have 20,000, so you can borrow up to 18,000. So you tell them, hey, I want to borrow $18,000. And here's the thing. The $18,000 that you borrow is not the $18,000 that you have in your cash value. You borrowed from the insurance company. The insurance company holds your $18,000 as cash value. So even though you taking out $18,000, your money is still getting getting credited. The $18,000 is still getting credited. It's not like the bank account where you take out $18,000 and the money is gone. You don't get no more interest. You're not taking anything out of your account. You borrowing from the insurance company. So your money is still getting interest. That's the beauty of it. So that's the amazing thing. So, you know, there's only three ways basically to pay for something. You either borrow, which you borrow and you're in the hole, or you either save up and you take it out. So now the money you take out no longer get interest, so you still lose. But wealthy people they borrow other people's money, and their money is still getting interest, constantly going up. So that's what I mean by how money works. You know, everybody think, well, you got to pay cash for everything. Sometimes paying cash is not the best way.
Exactly. And when people do borrow against their life or that policy, if I'm not mistaken, there's no 1099 and there's no taxes, because it's not like.
No, it's no 1099 or anything like that. It's your money, and the insurance company is holding it as collateral. You borrowed them $18,000 from them. So they're holding your money as collateral, and you can pay it back however you want to pay it back. You don't even have to pay it back. It's up to you. You have some options, and nobody's going to report any information to the credit bureau or anything. It's your money, and the insurance company is never going to lose, because if you die, that $20,000, that $18,000 that you borrow will be subtracted from your cash value plus the face amount, and that'll be given to your family. So it's a win-win situation for everybody.
Yeah, and that's why I'm so happy that I'm honored to have you on my show today to talk about that, because you try to put me up on game 20 years ago, and I couldn't see it, but now I see it and I believe it, and I wish I was. And again, just to share my truth, I borrowed against my 401k, and it was reportable income, and I had to pay taxes on that money and report it at the end of the year. So if I had the life insurance part that had cash value, I could have borrowed what I needed, and there would have been no 1099 or taxes. But this is getting good. We're going to break now in this show for the radio break. Stay tuned in. Hi, this is Charles Chadwick, host of Chadwick's Experiences. Be sure to follow me at Instagram and Facebook at Reduce College Debt, and stay up to date on our live broadcast. We are Hi, this is Charles Chadwick, host of Chadwick's Experiences radio show. By being on air, I'm able to share my life stories and experiences. As I have traveled all around the world, I have one main purpose, and that's to give a little something back to the next generation for a little motivation. Because in today's world, in order to reach their goals and find success, we all need some determination. Thank you, WDRB Media. Welcome back to the Chadwick Experiences radio show. I have my uncle here, Esau Waters, retired Air Force, military personnel, and life insurance. He has a little presentation that he wants to share with us about how we can better ourselves. So I'm going to just turn it back over to him. If you missed the first half of this radio show, please tune back in because it was a lot of information, ways to build cash value, not pay taxes, no 1099, and be able to live life, pay for college, pay for a car, even help you out in your medical insurance. If you have medical bills, life insurance policies can assist with that. Uncle Esau, back to you.
Thank you. Glad we are able to talk about this. This is a great thing. And like I said before, most people don't understand because they never had a financial education. So what I want to do now is just give you a few slides. It's not really a presentation, but I just want to teach some financial principles here. So like I told you about the rule of 72. So this is what, if you don't know, the rule of 72 is either being used against you, and this is what happens when you get a credit card, and your credit card, your company is charging you 12% interest, which is a whole lot more than what they charge you right now. And they say you can make this little minimum payment of so much amount of money. Well, that minimum payment that you're paying is only the interest. So if you have an interest rate of 12% and you owe $1,000, that's $5,000, and you only pay the interest, well, if you divide that 12 into 72 within 6 years, what you owe is going to double. So the rule of 72 either working for you or against you. So think about it. If you put your money in the bank and the bank only give you 1%, and inflation is 6 or 7%, and they only give you 1%. Not only is your money being eaten away, but it's going to take 72 years for your money to double. 3%, 24 years for your money to double. So you want the higher interest rate. You want to put your money where you can get the highest interest rate. So cash value life insurance is a good place to start.
Yeah.
So we want to get high yields on our money. So you have to know the rule of 72. So that's what I mean by having a financial education. Were you ever taught this in high school?
No, it was go to college and live your best life, but go to college is all what I heard in high school.
Right. So like I said again, we need to know how money works. So let's take this example here. So what does it take for a 20-year? How much money does it take for a 20-year-old to be a millionaire by retirement age of 67? So what I'm showing here is that if you want to get a $1 million by retirement, we're going to assume that you're going to get 9% average annual interest compounded monthly based on a retirement age of 67. So if you're at 20, all you need to do to put away a month is $113 a month and get it 9% interest. By 67, you're a millionaire. Think about that. Wow. It doesn't take a lot of money. The sooner you start, the less money it takes.
Got you.
The longer you wait, the more money it takes. So let's take another example. What about a 35-year-old? A 35-year-old only need to put away $451 a month. So they'd be a millionaire by age 67. So at 35, but look at what happens. We wait till we're 50. If you wait to 50, you have to put $2,088 away a month to retire at 67. Why? Why is that so? Why do you have to put so much money away? Because the 20-year-old has more time for his money to double than a 55-year-old. So when you're 55, you got 12 years before you're 67. But you're 20, you got 40-some years. So that money got 40-some years to double and turn over, and you get different interest, that 9% interest. You got to understand that the longer you wait, the more expensive it is for you. So most people don't start putting money away until they're late in their life. And now you got to put more money away. But if you just take the time to put something away every month. I don't care if it's $50. Put something away and put it in a good place. And cash value life insurance is a good place. So that's what we teach. The sooner you start, the sooner you can start making money for yourself. So a little baby, 15 days after they're born, put cash value life insurance on them.
Got you.
And you talked about that. You talked about the 401k.
Yep.
There's only three places you can put money. You either can put money in the tax now category, the tax later category, or the tax never category. So where would you want to put your money first if you had the option? Where would you want to put it?
Tax never.
Okay, so do we know where we can put our money that is never taxed? There's only 3 places you can put it. You can put it in a Roth 401k, IRA, or municipal bonds, which most people don't have the money to put it in municipal bonds, or in IRC 72. That's a version of the tax. That's a tax code which represent cash value life insurance. So cash value life insurance is a place where you can put your money that never will be taxed.
Yes.
And then you have the tax now category, which is the things that we are dealing with right now. Mutual funds and bonds and savings account. That's tax now. And then you have what we call tax later, which is that traditional 401k, that traditional 401k, the 403bs, and those plans are being taxed later. And so what about later? You don't know what your tax bracket is going to be later. So, so if you retire, you have a 401k, you are so happy. You have $1 million in your 401k, you get ready to retire, and look out, and lo and behold, that half of that is going to be taxed.
Yes.
So it wasn't just your retirement, but it also was the government retirement, because they're going to tell you, well, you never paid tax. I'm glad you saved all that money, but you didn't ever pay 1%. So now your money is taxed. But what if you could put it somewhere else where it's never taxed? You will be the winner. So that people don't understand how money works. So this is the other thing that we try to do. The 7 money milestones that we teach. The first milestone is get a financial education. Become financially literate. Find a financial professional that can help you learn about money. And once you do that, then you want to get proper protection. We protect our car. We have insurance on our car. We have insurance on our house, but we don't have insurance on our life. So when the main breadwinner dies and have no insurance on himself, his family is lost. And so they have the GoFundMe. A GoFundMe is not going to take care of you. All you have to do, even if you just get term or some kind of insurance to protect your family. So we want to have proper protection on our life. And then you want to have an emergency fund in case save up 3 to 6 months of income to prepare for unexpected expenses. So we teach that. And we teach debt management, changing your spending habit, strive to eliminate debt. So we want to eliminate debt. There's good debt and there's bad debt. You know, if you want to go in debt, you want to go into a debt that's going to provide you some income, like buying a house is going to provide you some income. You're going to increase your cash flow. So step number 5, we want to increase our cash flow, manage your expenses. And number 6, we want to build wealth. You want to build wealth for your family in the future.
Yes.
And once you build the wealth, you want to protect the wealth. You want to create a will and guard your legacy. You want to learn how to protect your estate. So those are the things that we teach in this financial arena here. That you learn this, then nobody can take it away from you. So cash value life insurance help you build and leave a legacy to your family.
Exactly, man. I know we're getting close on time, man. There was a lot of information covered in here, but I'm just so happy you came on the show, man. Where can people find you if they wanted to?
Well, basically, you can have my phone number. I have a website. It's howmoneyworks.com /Esau.Waters. You can call my phone number 813-597-6892. I also have a personal email. It's my last name, waters.esau@gmail.com. So you can reach me at those locations, and just shoot me an email, and we can talk about your situation.
Yeah. So I want to just thank you, man. And I hope people will listen. I have to admit my truth. You tried to put me on game about 21 years ago, but at the time I'm young. I didn't know anything, but had I listened, I would have built that cash value. I do have some life insurance, but now I'm even looking at it. And again, some of those benefits were when it builds the cash value, you don't pay taxes. Or if I get sick, you know, you said you can use that money for your hospital bills and stuff like that. So I'm almost 40 years old on this earth, and I've never seen a way that you can not pay taxes on money per se, as far as in those life insurance part. And there was more pros than cons with life insurance, the Pacific type that you was talking about.
Yes. So that's where the Bible says people perish for a lack of knowledge. So we don't have the financial knowledge, we lose. So we got the financial knowledge. Going to college, getting an education was a great thing, but they never taught me about how money works. So so I went to college and got a great education, but I still needed money.
Yeah.
So I started making money, and I didn't know where to put it because I didn't have the proper financial education. So if I can say anything, more than anything else in life, you need a great financial education.
I will 100% agree. And that's why, you know, I started this radio show / podcast, Chadwick Experiences, because you are part of my experience. And I want everybody else to know about some opportunities that I missed out on. That, you know, that's the whole thing I think about life, is making it easier for the next generation. So everybody, if you missed this episode, please follow back up with it, because life insurance is a good way, like my uncle said, to just provide protection for your family. You never know what can happen, and it's a good way to take care of your family. So this is going to conclude the Chadwick Experience radio show. I had Esau Waters, retired Air Force, as well as insurance provider.